All right. Like I said, no recap of the indices now. I will have that later tonight, Sunday night, or Monday morning because of what happened last night. All right. We will start with Apple. So it's at all-time highs. Needless to say, the question is, where can Apple go from here? If the markets are higher in the future, Apple will be there as well. They need new leadership, in my opinion. So if I'm shorting Apple, and it is shortable here from a stock perspective, point A to point B, not shortable in concept, I can stay short until 234.5, maybe 235. So above that, then it becomes a new ball game. Meanwhile, if I do short it, 222 would be objective number one, and I would stop there. This is a very bullish market. I don't think we can count on much more than that. I would be selling rallies. So if it drops to 224 and then it rallies, I can fade that as well. So don't overstay your welcome in the bearish scenario. So I'm saying basically whatever happened back in June can happen again here, and it would be normal price action, a dip within a rally. I'm going to say that a lot. Again, what happened yesterday to Trump might have pretty serious implications into the market. I really don't know. We will wait until we see. So keep that in mind. Everything I say here is under normal circumstances. I'm not sure how they're going to react to it. All right, we will go to ABBV, and the legend on my screen is still there. They're inside of a resistance zone, the green mark, and 174 or higher on a closing basis would be a breakout. But even then, if you look left, there's another mountain of things to deal with. Now we're approaching earnings, by the way. I believe Netflix starts reporting this week. So this one is 11 days out. And you do have support at 163. So if you're trading this week, ping pong between 174, 163. You lose 163, you come down to the zone of 154. These are trading comments. As far as investment, you should do your own homework on this one to see where it can go from here. Whoops. ACHR Aviation looks like it had its a field day last week. So rallied into a prior fail. This here would not be an entry point for me from a trading perspective. If you're an investor, you should do homework. It has no income. I would take the money and run if I was a trader. From a trading perspective, above 560, it could get interesting to get another dollar maybe. Other than that, I personally wouldn't trade this. Adobe, great company, awesome rally, not a place to enter longs. So it bounced off of support. It filled some volume vacuum, which we had two boxes. One said volume vacuum, and they went through it, and then they stopped just above volume support. Pretty good commentary, I would say. Here we said we would get here if we lose these zones, also pretty solid. So I would trust myself to say that this is indeed a zone of resistance, and look how they died exactly in the box. So until they get up to 600, actually I would fade it here and into 600. So if it rallies, I would get out. And if you want to short it via some bear call spread, it is shortable that way. Good company. I'm not arguing with it. I'm just saying trading versus investing. ADM. Okay, so ADM, we have a bearish setup. This red W on my screen is bearish. And technically, it wants to get closer to 63 and 62.5. As long as it's, well, actually, you would have to stop using something else other than the chart. Of course, as soon as I start talking, my phone gets blowed up. Okay. So the idea is here, 66 and 67 is a stopping point. And my man, Rodrigo, I'm doing a live session here. This here is a vacuum spot. So they may try to seek it. It's shortable here with a stop, shortable again up there. These are trading comments, not investment comments. In theory, it could get to 70. If I don't want to short it, let's put it this way. I would not go long here from a trading perspective, even though it could get to 68. I think I'd be looking for a place to short it for a small dip down to 61 or 62. So that's what I would do for myself. For example, I would consider this a peak at 78, 77 and a half. This a valley. We're right in the middle. So if you want to look for bigger stretches, like a bigger runway of positive or negative, pick a better entry for me. If you're a super fast trader, it's a short with a stop. I think that's the best thing I can say about this one. ADSK. Man, this company is ancient. This here is not an obvious entry point. That's a nope. NOPE, not an obvious point of entry. Good morning, good morning. Thanks for being here on a Sunday, by the way. So this is not an obvious point of entry. If I was long for a trade, I would be out here. It could dip and fill that little gap below at 228, although not necessary. The P&L seems like it's okay. Earnings in about 38 days. Agnico, so this one's going to rock it. I'm not going to make a comment on it. Rodrigo's cracking me up. Okay, so 61.4 was the breakout, and 25 points above that maybe. So maybe they're headed to 85. Maybe they hit it this week because gold. So unfortunately, when the shooting yesterday news came out, gold must have spiked because Bitcoin spiked, and basically money runs out of the establishment into something else that is not controlled by anything. So run the safety. That's the knee-jerk reaction. I honestly don't know what's going to happen tonight. Had the outcome been completely different, I could have told you what happens tonight. We'd be down gobs and gobs. But given this outcome, I honestly don't know. So this one should be interesting. Circle around, come into the live room, whoever asked about this one, so we can talk about it in the live room tomorrow. AES. Earnings in 19 days. And from a trading perspective, I would expect a dip. If I wanted to be long, I would buy the dip into 1840. The closer to 1840, the better. Because the opportunity for the longs is to take out 1940. And if they do take it out, they could get to 2040. But until then, the zone above us is resistance, and you would do better if you drop. So if you want to visualize it, you want to drop to hit some support levels here and try to get back to here. And then now you would have an inverse head and shoulders that could target here. So I would not go long into this R here. This is a prior fail. I want them to tell me that yes, indeed, they're doing higher lows, and it wasn't a fluke. Okay, that would be my trading comment on this one. AFRM, I wish the people would make up their minds on this company. I'm afraid for anybody that lends money in this environment. If we have a financial crisis, let me rephrase it. There's a good chance the next hiccup in the world is financial, and we'll see how it plays out. So AFRM, I do like it on dips, and I'm glad that you guys are coming to me on dips, except you should have come to me last week. So I want to see if it holds 2750. If it doesn't, I think it goes below 24. What I'm saying is that look at it. Rally, new low. Rally, new low. Rally even bigger than this one, new low. Why should I trust this rally? You see what I mean? So there's a good chance this ends up being another dip. All right, so anything above 3150 is an exit zone for me from a trading perspective. From an investment perspective, it's okay. I mean, it's not awesome. It's okay. Valuations, we can quickly jump in there. Do we want to? From a valuation, it's hard to evaluate something that new. 4 times sales, it's not cheap. It's not super expensive. It's been more expensive, but it's not cheap. So let's just stick with the chart. You either invest in it for the long term or you trade it. These are trading comments right here. AMD. Okay, AMD going into some red band. It must be bad. It had a good week, and it's running into a prior fail. And my rule is I don't chase a prior fail. So AMD still has its headline, like NVIDIA. NVIDIA said, I'm going to change the world. I'm going to change my own P&L, and they did. This one hasn't done either. Neither changed its own P&L, nor did it say it. So if Lisa Su, the CEO, comes out and says, guess what? We've had our moment. We're coming. We're going to double. It will do what NVIDIA did. Until then, as an investor, I would sit on it. And as an investor that's looking to invest in it, I would nibble. I would definitely not take more than half. Technically, they overcame 170, and that's pretty good. And technically, they may get to 192.5. And that would be my exit zone from a trading perspective. The P&L is okay. It's not awesome. The company is okay. It's not awesome. It's pretty good. But anyway, trading, I think, at these levels more than investing, given that the market itself is in the stratosphere. Amazon, what do they do? Have you ever used them? Yes, I've used them like every minute of every day. So I would be buying of dips if I was a trader into 188. And if I'm short, I would exit entering 189, 88. If I'm short via credit call spread, I'm okay. You should start thinking about earnings. I believe Netflix reports this week, Tesla next week. So the mega caps will move with those usually. And Amazon is changing the world, has changed the world. I wouldn't bet against it. It's one of my favorite companies. As an investor, I wouldn't touch it up here. Okay, because it has to trade within the market. Let's say it has a rosy future. It still has to trade within the market. ARM also has a great future, has incredible margins, like something unusual. I got long at 55, got out at 70 something, got long again at the last dip it had, and it hasn't dipped since. As an investor, I wouldn't touch it up here. I don't care how good the future is. I'll put it on my to-do list. Next time the market crashes, I'll load up on it. I'm pretty patient that way. I'm pretty sure there are other companies that I can nibble on right now than this one at these levels. From a trading perspective, if you haven't done that before and you definitely want to buy the company right here, right now, shares, I would encourage you to start looking into how can I sell puts in order to enter shares at a lower price. Ask me in the live room or ask me in the chat room. We can go down that road. For me, from a trading perspective, 164, 160, and 152 are levels I would be paying attention to. The prior breakout is down in the 140s. Just keep that into consideration. So look at this. The moon comes back to the moving averages. Moonshot, what if it comes back to the moving average? You really want to buy it at 181 when it could go to 145? I would rather miss out from 181 to 200, 210 than get here and then it comes down to here. Some people say I'm in it for the long term. I understand, but if I am in it for the long term, why am I rushing in? What's the difference between missing out on a little bit of downside or a little bit of upside? So if I'm in it for the long term and the world is an iffy situation, why would I deploy risk up here? That's my question. Pushback. Good company, I have nothing against it. AVGO, excellent company, I have nothing against it. Look at the P&L, solid. Okay, so Broadcom future is looking rosy. Same comments as ARM. If I waited this long, why am I rushing now, right? Oh, the split is coming. Okay, so the split doesn't change the value of the company. That's it. It's just splitting whatever you had into smaller pieces. So you have 10 times as many. However, I don't know how much is splitting. 10 to 1. Let's see here. 10 to 1. So you will have 10 times as many stocks at 1/10 of the value. So, and these days, what is that? CNBC has convinced people that yeah, you can trade splits, and they are the ones that propagated for decades. Oh, idiots! Whoever trades splits. From a trading perspective, I wanted closer to 1520, so 150 eventually, than up here. Okay, I don't know exactly. Maybe it splits on Monday. Okay, so the problem was the split. If you had options, now you have 10 times as many contracts to close. So God help you if you had 10 contracts on. Let's say somebody had a butterfly, 10 lots of a butterfly. So that's you sold one, you bought one, sold two, and bought another one 10 times. Now you're going to have 10 times as many contracts to close. It's a nightmare. So good luck with that. Let me know if you need help. Boeing, I closed all of my trades in Boeing. It was pretty successful. I shared them with you. I said, let's sell a sold put I had. I may have also suggested the sold put spread. It went under fire, and then the stock rallied. And I know a couple of people that got assigned because they chose a little bit more aggressive credit put spread, and they ended up making money as well. So my sold put, I turned into a strangle sold. So I sold calls as well, several lots. But I finally paid, I think, $2 to get it off the books last week. So what do I do now? Nothing. It's in the middle of a range. It has sellers above and buyers below. And it's going into earnings in about 17 days. Apparently, they, perception is that it's a criminal activity company. I don't buy that. It's just a mess, like GE. So the headlines could not have been worse. Well, they could. Hopefully they won't, like from a crash perspective. That would be worse. But until then, this is a headline stock. So trade the range. Iron condors work, but not through an earnings report. So after the earnings report, I may go back to trading it and sharing it with you. You have a seller into 190 or higher. You have a buyer anywhere below 174. If you lose 170, 169, you might end up at the low 160s. If you lose 160s, you'll be lower than 150. But those are not on the docket. You see, it traces lines pretty well, my lines. And if you break out of 193, you can get to 202, 203. I doubt it. BABA, I personally would not trade it. Hopefully my buddy Ali got out. He called me in panic. It was falling and he had a large position. I would expect downside from here, say down to 76 or 75. The reason why I don't trade it is because it's in China, and I honestly don't know anything about politics in China, so I don't know if the Chinese regime wants to beat it up again or not. I don't know if it's still tied to 10 cents or not, so do your homework on this one. Technically speaking, a stock falls from 90 to 72, runs back to 81. That's an exit spot. It's middle of the road. Look left. Look how many times that level has been pivotal. It was a ledge, fail, coming into it, not for me. I would expect 77 or 76 before 85, but I wouldn't short it for that. But if I was long, I'm out. If I'm looking to get long, I would be patient at the risk of missing out. Bank of America, I'm not sure why we're talking about it. They report, actually, I do know. Never mind. Goldman Sachs reports before the market opens, but Bank of America reports, I think, tomorrow after. So if you want to discuss it, come to me during the live room. I traded JP Morgan 40 earnings for us, and if you were in the live room. Those are trades that I can only share live because I only come up with them last minute by looking at the options, and there's no time for me to disseminate the information. I can give you an idea as to where the options are lined up for the earnings. As an investment, it's a good company. I wouldn't touch any bank up here. The banks have rallied. The banks are like almost leader, like tech. They're making a lot of money, but they have a lot of tailwinds from the government, and I'm not sure how long that will be there. Something's going to break, and I don't want to be on board of the banks. 40.2, super solid support zone that starts through 37, 38. So from an investment perspective, you have a solid base below you. From a trading perspective, I wouldn't chase them. I am short JP Morgan, as you know, and making a little money too. BLDR, nice rebound. Let's say I was long from 165 and it came down to 132 and I added and this brought me whole again, I'd be out. So BLDR is going into a zone that I think will be super difficult to take out. Sales are not that great, and compared to what they were, okay, not forecast, I'm just talking about actual. So I don't know the story behind it. And let's see here, bearish bet on valuation, but that was back there, so that played out. So now it's going into a prior fail and a huge failing zone above it. Doesn't inspire me to go long. These white triangles are my own concoction. They're saying maybe you want to get out. This is where they attempt to go long. Those purple ones are the opposite of those white ones. So not a great place to start. But actually, let me see if I can add something new that I was messing around with yesterday. Do I know what I called it? Maybe this one. Yeah, let's keep that on the... I just literally built that for myself. the green arrows and all these little tiny lines, areas of interest. So if I'm going into these tiny lines, it's resistance. Anyway, I'll explain that to you later in the live room. Not inspiring along here. Maybe a dip to 145. So I'll give you a visual of what is potentially a healthy path. This should be support zone. Okay, but I can tell you that there is an area of interest that they left open behind them. You've seen me talk about these. This is an imbalance that eventually needs to be resolved. Actually, it could be a little bit higher than this, like here. So this dip might be a little bit deeper like this. So I would buy the dip on this one. Bristol Myers, and we can take this. They're consolidating. I'm going to take that out. And you have a lot, all these red rectangles that were green. So this was support, now it's resistance. And you have support below. So it's kind of stuck. This is a 2-hour chart. Let's go to 1 hour. So sellers around 41.8. You can see it. Sellers right there. Buyers below. I think it's easier to lose 39.40 than it is to take out this. But if I wanted to give you a place to play, it would be this zone right here. So this would be an area of contention. So if I was actually trading it, I would get long here with a stop and get short here on the way up and get short here on the way up. So you play inside the zone. And if you lose the zone, you're going to end up at 37.40. These are trading comments. You should do your own homework. 12 days until the earnings. BX, not for me here. Wow, that's a pretty powerful move. Oh, earnings in 4 days. All of this happened on the back of Wells Fargo's, not Wells Fargo, yeah, and JP Morgan's reactions and Citigroup. Very strange. If there were no earnings, this is a shortable spot. Now, if the bulls can take out 132 in force, they may get to 138 or even 140. So be careful if you're shorting. If I'm long, and I was long as a trade going into an earnings report and I'm winning, I would lock my profits. Buy the dip into 121 or lower. Caterpillar, great company. I don't short it in principle. It has a lot of fans on Wall Street. It has given up a lot off the highs. That's awesome. So it's not so frothy. Technically speaking, 310 is a support zone. And if you lose 310, you might end up at 280. And the question is, are they now selling rallies inside of a descending channel? I am asking, I'm not telling you. Okay, so we have from here to here a descending channel. On a longer time frame, there's an ascending channel. So this is a short-term comment versus a long-term comment. Let me give you the visual. You see that? There's a long-term ascending bullish channel and a short-term. So they are buying dips. This is a dip into a pivotal support zone that could extend all the way down to 295. So if you're shorting point A to point B, be careful and definitely remember to book your profits. They could have made a nice move. So how about I say this? If they hold 330, they're probably going to 348 or 347. Cadence. I've dealt with Cadence when I dealt with Cadence in the past life. They've been around a while. So I don't think that they can break out of 330. Great P&L, earnings in 8 days. Actually, let me change my statement. I don't honestly remember exactly where they fit in the tech world. So they're in the middle of a range. Exactly in the middle. This is an extreme high. This is a solid floor. So if it falls into 300 or lower, I would be looking to go long from an investment or a trade. And if I am long here, I'm looking to break out, but you have 8 days. In 8 days, you'll have earnings. And the reaction to earnings, I don't need to remind you, it's not about the quality of the report. It's about what the people expect. Okay, so JP Morgan beat, and raise, and beat, and whatever. And it fell. So it's not about the quality. It's about the expectations. And I'm not talking about the estimates, the official estimates, but expectations, like feelings. Okay, CELH went long, I believe, right? And it's working out. Yeah, so this will be an investment for me if I'm an investor. It's a good P&L. Look at the growth. And it was just thrown to the trash. The day we went, I shared a long, and the next day it got downgraded or something and it fell apart, and then it recovered. So I was, my trade, I think, sell a put spread, right, somewhere around 49. But if you read the comments, I think I said I would like to own shares by selling a put, but I'll start out as a put spread. So if somebody listened to the comments, what they would have done on that spike down after the trade setup, they would have sold the lower protection put for a profit in order to say, okay, give me the shares at 49, I'll take them. And then if they did that, now they have a really profitable trade that they can close already. Okay, so I haven't changed my mind. This is a base, and it's okay to own it. Now the risk is technically, if you lose 48, you could get the 32 or 22. That would only be, I think, with a disaster in the stock market, because all stocks will fall. On its own, this one has great support below. So that's why I also said I believe half position only or partial position, not all in. Because if I buy a stock, regardless of how good it is, and I buy it into support and the stock market corrects, guess what? My stock will also fall, and I would need the ability to add to it, the position. CIFR. That's a pretty wacky P&L, so you should figure out what's going on here. Study the company from an investment perspective. From a trading perspective, I don't think it can break out of 510 for now without a major headline. But it looks pretty volatile. So let me rephrase. It has a tall order to breach 5.7 or 5.6. When you enter the zone above 5.1, it's an exit zone, and below us, there's pretty good support. So you can play that. Okay, Clean Spark. I don't like that they're growing sales as fast as they're actually spending. What? Okay, this one of the magic net income more than your sales. So what is that? A grant? What? How does that happen? So I don't remember that, learning that in school. So 14 or lower, you get to 11.5 or 11, and it's a bear to get out of 18.5. So swing trade. I would be a seller above 17 and a buyer. Actually, you do have support. You can buy into 14 with a stop. If you're investing, just buy it, half position, and forget about it. If you're trading, I just gave you the levels of trades. And if it's a stock I would like to own, on red days, on really red days, I would sell puts, create income. And if they give me shares, they give me shares. I wanted to own it. Personally, I don't, but that's how I would do. I did that with Palantir for weeks. Okay, CME. Look at this P&L. This looks fake. It's so good it's fake. Look at it. Sales, profits, sales, profits, sales, profits. What the fudge? That is like fake. And the stock's trading like it's going out of business. So there's something else going on, right? Okay. I'll say it first. If you lose 190, you go to 178, which is the base from before. And if you rally into 204, you're going to face a lot of resistance. This whole shebang. Earnings in 10 days. Be careful. Why is this acting like this? If you're solid about its fundamentals, maybe you take a flyer into the earnings, but I would definitely not take more than half position if I'm an investor. Okay, for all the reasons I cited before. Chipotle. Oops, sneeze coming. Hopefully it doesn't. It lost an important ledge. 60 needed to hold. Post-split, I love the fact that now it's attainable for a lot of people to sell puts, because this is the best restaurant group I've ever seen in my life. I know restaurant P&Ls, and the comps that these guys turn are unbelievable. I don't like their food. It's tasteless, but their P&L is amazing. 61 shortable, 63 shortable. Those are tough areas. 60 to 63, a whole bunch of sellers. And if I'm an investor for the long term, I would nibble 1/3 of the position and add the second third around 47, and then wait for a crash and add the third, hopefully around 35, if it gets there. Why am I saying these numbers? Because, stocks don't go up to the moon without checking back. Remember the bad burrito phase? Yeah, it fell 40%. It hasn't had a stint like that in a long time, but this is pretty high altitude from a chart perspective. And if the market gets a hiccup, this one can get to 46, which would be an outstanding. Anything below 46 be pretty good entry. I'm not forecasting that. I think that they're starting to sell rallies. Costco, same comments exactly. Look at this. So these are lines that have not moved. I don't remember when I drew them. They were money. What happened here? So broke out into resistance, right? And then came back down, and now they're into the base. So now you're back at the base. So the problem now with this huge breakout, you built a mountain. How are you going to take out that mountain? What happened with this headline? I wonder what they said. So this target is still in play. In fact, the target now became 790. Okay, and this is how it can happen. Excellent company. I love it. Okay, this is going to face selling. And if the markets hiccup and if you lose 8, whatever that line is, 837, I think you end up at 790. Now this is the target of that red path. Let me give you some boxes from this last week. I think this is going to be a problem box right there. Anywhere above 870, 868 is shortable. In fact, I could sell a call spread on Green Day. Like if it pops this week, I would sell a call spread, buy a put spread. And I'm going to add it to my list of stocks to watch. Short rallies, in my opinion. From an investment perspective, I'll wait for a nice dip to buy it. If you have it, yeah. Great company. These are comments on the chart itself. I'm interested in seeing what that headline was. Okay, we are talking about, who is this? CRM. Good company. This company basically invented the cloud, came up with the idea. When they battled Microsoft years and years ago, they were a tiny company and beat it at its own game. So 272, you can see it, where that horizontal yellow line is a pivotal zone. Was support, they lost it, they went into it. So they are making higher lows. That's good. You can see it. And they have cut into these lines. Let me see here. Okay, so these are on the way down. So they filled this one and they filled that one. This one is filled. We can take that out. They might be headed to 236. They almost filled this top one. They came close. So I would say they encountered resistance they couldn't beat. So here's the next step. They need to hold 245. If not, they're going to 235. That's the immediate comment. Hold 245, otherwise 235. And it's going to take a lot to take out to 266. You take out 266, you might end up in another cloud of resistance. So the path up looks a little tough. This was the target down. I said if they lose that support, they come down to here, and they came down to here almost exactly. So we didn't forecast it wrong. We nailed it. In other words, this yellow path happened. I'll move it left so that we don't confuse people. I'm not cheating. It was there. You saw it, right? So this one will go with it. So now they're going back into it. That's resistance. Good company. I would own it on dips. I would sell puts to own shares. I would sell aggressive credit put spreads after drops. You have 38 days before the next earnings. CrowdStrike. This one dips for like 30 seconds. And then they buy the dip immediately. This one scares me. P&L's solid. That's not why it scares me. This altitude, it's literally off the charts. So I don't go long stocks off the charts. I'll wait for a crash, and they always have a crash, either from their own self or from the market itself. So be careful. Not for me at here. So here's the statement. 384, super strong resistance. You need to take it out before you lose 365. If you lose last week's low, you end up at 340, 332. It's tradable into 300 via credit put spreads on dips. And you have 44 days before the next earnings, so it is tradable. I don't think you can take out. I would be comfortable with a bear call spread, credit call spread. Cisco, same. I would short Cisco like Oracle into this breakout. This again is not against the P&L, it's just a trading comment. Shortable via bear call spread, 31 days until the next earnings. And actually the better one yet is if it pops, short it then. When I say short a stock, I never mean short it outright. I mean buy put, sell a call spread, or a combination of those two. Okay. Responsibly shorting it. If I'm long, I'm out. I would buy the dip. So I ping pong, trade the rally. Sellers at 48.20, buyers at 45.20. You have $3 to play around with. DDOG looks bearish. I think it goes to 121. It looks easier to go to 121 than it is to 137. Fair? It's easier to do this than to do that. So I would not hold calls. I would not hold a call spread. I could sell a put spread if I'm bullish, but make sure to account for the distance. Good support down here. Okay, so this will be a support zone and nothing here, so make it green. And better support lower even. As far as candles, maybe there's an interest around 121. AVGO. Hopefully I said it right. They're selling rallies. Look, rally sold all the way through for months. Why is this one different? It isn't. So I would not be long here. So you're telling me if you're buying a call here that this rally here is different than this one, different than this one, different than that one, different than this one. Each one of those rallies looked great and then made a lower low. So the way I treat these, I assume they're going to make a lower low until they stop doing that. So this is the best case scenario, a lower low that does not make that barely makes a lower low. So I'm being nice about it. Okay, so maybe buy the dip to see if you bought the dip on valuation and it's an investment, don't add. Just leave it. And don't add at 125 either. Add at 116. Okay. Dollar General, I would avoid that whole segment. I honestly don't know which one of them is going out of business and shutting stores. So technically speaking, this looks like it wants to break out. And if it does, 142. If it gets to 142, I'm out. Look at the mountain of trades they need to overcome. This long thing, these fails. I think anything above 142 is a impossibility for now without game-changing headlines, like headlines that matter to the bottom line. The real kind of headlines. This tough place to be. All right. Speaking of tough, that is a long list. Tough day. Disney. I would invest in Disney if I needed to make an investment. Only 1/2 position, and I will add to it if I lose 35%. It's in a support zone. This came to fruition, and it's in a support zone. The zone extends from here to 85. So if I'm long, I'm not adding. If I'm looking to get long, I'll only take 1/2 position. And I expect sellers into 99. And earnings are in 23 days. It will follow the market. DraftKings, somebody said, you want to trade DraftKings? I said, I don't want it. But I looked in my portfolio and I have the trade I shared, which was a long. I think it was a bull put spread. And that's fine with me. I could be long that. If I'm an investor for the long term, I can sit on my shares, but I want to leave room to double my shares in case of a market crash. Is this an entry point? It could be. I mean, we have support below, we have resistance above. It's not a bad one. Let's zoom out. You see, it's in the middle of the everything, so it's not at an extreme. So people that went long up here, I would have questioned them. Down here, you do have support. You may get to 25 or 24 on a disaster in the market and a disaster reaction to its earnings in 19 days, which is where I would add. Right here, it's okay. Dollar Tree. Okay, so it's same comments about that other dollar store, but this one from a technical perspective, if I went long, I'm a trader and I'm expecting a 120 and it could come. 116 resistance, and if you lose that, it would probably go to 84. So I would make it a tight stop if I'm a trader. If I'm an investor, they're selling rallies. You're buying into big support, yes, but make sure you don't go all in case it falls apart. Dexcom. And this one, every resistance comment we've made worked out so far, and they're fighting to avoid this. So I'll say it this way: for as long as Dexcom is under 118, it's at risk of drifting lower and making a lower low. 11 days before the earnings. They better do it before the earnings. That's a scary position there. The opposite, this one, ENVX, no income. So it's all hype. By hype, I mean there's no income. So it's all about the future. Look at the behavior. Every spike has given back all of it and then a lower low. Where are you in that spike? How comfortable are you? I think you will have an entry at 14 soon enough. I would not go long in here. If I'm an investor, that's a completely different comment. I don't know what this is. Energy. Again, they look the same. No income, rocketing to the moon. The charts are not going to help you. You either invest in it, you do your homework. The chart's not going to help you. The chart says exit, but I wouldn't take advice from the chart. Do your own homework. Okay, oil company, right? Energy company, Diamondback. FANG. If you take out the area of 210, I don't know, 230 is available to you, maybe even more. I don't know why you would do that. The P&L couldn't be more boring. So this is one of those mystery stocks that's rallying like NVIDIA, and it's not even close to having NVIDIA fundamentals. So if you're a trader, you can trade this red W. This red W says we go to 140, maybe even 90 in the next few months. But we have earnings in 22 days. So from a long-term swing perspective, this is a technical bear than a long. From a shorter-term perspective, they're looking to break out. So if they do break out, short it. That would be my trading comment on this one. FCX, bearish. That red W is bearish technically. The fact that we have everything above 52.50 should be a struggle, even though it looks like a breakout opportunity. And everything below 48 should be solid support. And you're kind of stuck. You do have support, you do have resistance, so it's a matter of headline. Maybe it's the earnings. The headline is emotional, will push people out of the range or below the range. So make sure you make your bets, and I'm underlining bets appropriately. If you're an investor, then make your decision based on valuations. And I'm not sure where it stands here. Do your homework. I can tell you that if you lose 46, 47, you might end up at 40, which would be an excellent entry point. And with that, we will end the first video.